Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
So right now with financials, what we see, this is puts and calls and Vanna. Oh, that's interesting. So they are hedging pretty heavily. Oh no, it's XLF 49.56 right now? Or did they just go through a cut?
Sounds good. Yep.
There we go. Yeah, so right now what we have on XLF is, so this is interesting. They are selling calls to hedge their books. So this is usually done to capture an interest rate that is inherent in the options. People don't want to buy puts because they don't want to be negative carry. They want to be positive carry, so they sell calls. What that does is it does kind of drag the market up a little bit, but if there is any negative catalyst, any bank related thing, it's going down, and it's going down hard. We saw that in February, right before the February OPEX. We saw nobody was buying puts. Puts were so underpriced to the point where people started saying we were selling puts, and they weren't selling puts, but nobody was buying them. So they were so underpriced that it left the door wide open for a drop. And we were in in the money calls here on XLF. It would be the equivalent of being up here in like the 53 range. That's where we were located. And we knew that as soon as February OPEX came off, we were in deep danger, even if it didn't happen like right the day after, even though it did.
When did you see this? Because it just so happens that I run a live trading room, right? So literally on March 3rd, I saw a massive 52 by 50 put spread come in for March expiry. So we hit that, and it was down to 50 within a New York minute. It took like 2.5 days, which is unusual, but clearly they came in, they were selling calls, they were buying put spreads on March 3rd, and then it immediately started collapsing. So
what we would see,
what you saw,
what would we see, and what we would say in that, when you saw like a big put spread, sold calls in order to finance it, right? If you sell off right after that transaction, what that is saying is the institution that owns that portfolio, which has to be big, the institution that owns that portfolio is hedging an existing portfolio. They are not levering up. So that is a bearish signal right away. They're hedging, and they're not
selling, they're hedging, not selling.
They're not buying anymore. So
correct. What did you see with yours? That's what I'm trying to say with the XLF, because it goes back a little bit, and then you're saying right now they're still selling calls, so they're still hedging. They're not, like you said, hedging is bullish, selling is bearish. You're telling me that they're really more likely hedging than selling outright.
They're hedging, selling calls. They're not selling XLF, but as soon as XLF has some kind of negative catalyst or something that you see, you're going to want to see puts being bought, because right now they're only small puts here.
But you also have the underlying where they could go and deal with JPMorgan directly, or Berkshire Hathaway, or Bank of America. So they could go to the Visa, MasterCard. Those are the big weightings, or the top 5. So they could actually be playing the individual as well as the ETF.
Yes. We see a lot of dispersion as well. You can see here JPM has a lot of traffic as well. We see a lot of dispersion in that sense too. We have Bank of America, we have JPM, we have like the big banks. They have a lot of what we see here. This is sold call, it looks like, which is bearish. That's people getting too bullish, right? So those are sold puts right there.
Where?
That's probably what the big spread is at 230 here on JPM. I would expect the market pull back pretty quickly back to 230 here in JPM, and then if it passes 225, you're going to want to see puts getting bought. This is that's not
an
very
easy
supportive.
One though. You know why? That's the 200 day. So JPMorgan literally on 218 made its last high, and 219 rolled over, which ironically is when I started to see the breadth and the net selling come in, and warned clients before we had the Friday, February 21st sell off, and then we obviously dropped from there. But JPMorgan went all the way down to its 200 day. I mean, we're talking about a high of 280 down to a low of 224. That's a massive move in a very short period of time. So to retest the 200 day around that level that you're talking about is usual. Like it usually does that snaking action. It'll retest where it's already been. The question is, will it break?
Yep, that's the question. And right now, I would argue, yes, it would break. To sell the 230s it would break and you would probably get some momentum, you would want to see puts getting bought. This is an aggressively bullish option, from customer standpoint, an aggressively bullish option look. We have puts getting sold and calls getting sold. So probably the way I would play this with options would be to sell call verticals, because you don't know if they're going to necessarily push it down. You don't want to be that guy who's standing on the train tracks hoping the train will stop as it gets closer. So if I sold a call vertical, it would probably be in this range right here, 255, 260, this kind of area, because this right here is strong resistance. JPM, this look right here, you have to climb up a mountain in order to go up. Yeah, I don't see it reaching like kind of this area right here. And if we do drop and we drop hard, then you would realize your full game.
But you're talking about by April monthly expiration or April 30th? Like, what is your time frame as you're kind of sizing this up? Because time frame matters, direction matters.
I would probably do this. Yeah, I'd probably do this for the April OPEX, only because that's good timing. Kind of, you're going to get a lot of premium. And if we do drop and we drop hard, you're going to realize all that premium pretty quickly. And you could just, I like to say you always have to pay your lunch money, because you never know if you're going to bounce and start violating bad things. So pay your lunch money, but, go have a stake. Yeah.
So the views right now, because again, when we were talking Monday morning, it was, a bigger picture of macro, why bullish, why bearish. We've sold off a lot, and yet we still have the April 2nd reciprocal tariffs that are to be deployed. Some people don't think they're going to happen. I personally do. They might be pushed out, but for right now, do you see any concentration around that April 2nd implementation date of Trump's tariffs, reciprocal tariffs? Noteworthy about, in other words, is it sell the rumor, buy the news of tariffs? Is there, in other words, that second, is there any kind of importance around that date?
So here's what I see, and it's kind of it's interesting but starting April 1st right here, I read the news too. I know, April 2nd is a big day, and it flows March 31st is a big day. So starting after March 31st, there is some hedging here, but not like a ton. And that's kind of why I think we might be, this is a little bit supportive, but if we drop, if implied volatility expands, then, this can be a pretty strong downside move. But right now, I'm seeing that there is a little bit of support. If we get down below this area right here, this 5,600 area, it can run pretty quickly to 5,500. And that's when I would expect to see more support here. If I look here at just puts, I want to see if these are puts or people are buying calls. And, that's interesting. So it seems like there's a lot of call buying. So in SPX, now typically call buying is not necessarily even bullish. It's maybe trying to recapture certain gains, recapture certain losses or something like that. This right here for calls is quite bearish, actually, because there's not going to be here. If you see a big negative strike right here, like we see here at 6,000, that's somebody buying calls there, a large call strike. And that's usually actually bearish. It's kind of hedging a bearish kind of outlook. Okay. So somebody probably shorted some ES and applied calls here at 6,000. We see that here too in the 5,700 region. So this is not very bullish after March 31st into April 2nd.
So this is helpful, right? So I'm an if then trying to look at where are the levels that I'm looking for. I think 5,600, the E-mini in particular, is also a line in the sand with Fed liquidity. And I know that Jay, who was on that call with us Monday morning, is very focused on Fed liquidity. So we're really on this kind of critical support level. And I very much expect at least 55, 53 within the next, few days next week. But after that, where to? So that's just a bounce. That's just, we have to, retest. But if we take that out, then we have some lower levels to come in. And obviously the dates are end of the quarter into April 2nd. And I'm curious what your kind of the dealer customer tug of war says about positioning into the start of Q1. And so right now you're saying it does look more bearish than bullish. Long story short, keep your hedges.
Yeah, I would keep your hedges. I would not risk a ton. Right here, the big fulcrum between, the March 30th, this right here, I guess would be you said April 2nd time frame. That would be the big fulcrum here is 55.65. That's the JPM collar.
Yeah.
This is the big area after March 31st. That's when I would want to see where we're at. I personally, what I see is I think we do hit 57.70 kind of area before March 31st. It's only 100 points away. And that's, a week and a half, 2 weeks, I guess, of time there. I think we do hit it. Once we do hit that area, all bets are off. We can, 5,800 to the 5,770 to 5,800 area. I would want to see if we blow past that, then 6,000 is the huge strike that we saw before, right here.
Yeah.
This strike
If
right
then,
here.
but that's a
Yeah.
big if. Okay, so that's an if then. And your time frame for that though is when?
So 5,770, 5,800 area should be before the end of March.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.